There are still ways of making money in a bloody falling market. You just need to know how to do it. The current crypto bear run can be unnerving to most investors. Cybersecurity hacks and several negative factors have been driving the current crypto bear run. For example, Ronin, the platform powering Axie Infinity, lost over $500 million after a hack. Also, the Terra Luna collapse further put pressure on the market. Let's not even get started on FTX implosion and the domino effect. As a result, most crypto assets have been dropping, prompting most investors to shy away. But even in the traditional financial market, the bear run is a diamond in the rough for keen investors, the bears. Take the case of the oil market crash in April 2020. It went negative, closing at minus $40 a barrel, a historical record. At the same time, a group of Essex traders made over $660 million within hours by trading oil futures. Well, that's how bears roll, by exploiting opportunities in a falling market. The same applies to the crypto market. You can also make off some tidy sum during the free fall in the crypto market. That's why we've compiled these strategies to help you make money in the crypto bear market. The first strategy is short selling. Short selling, also known as shorting, means selling a crypto asset with the hope that it falls in value. That allows you to repurchase it at a lower price and profit from the market price difference. The principle hinges on the primary trading strategy: buy low, sell high. For crypto shorting, you must sell the crypto asset on a downtrend and buy it back after it falls below your buying price. Take the case of Bitcoin, trading at $22,750. Suppose it hits a downward trend, expecting it to hit $20,000. You can sell it for $22,750 and repurchase it at $20,000. You will make $2,750 before transaction charges. For the crypto market, the strategy is applicable in the futures market and margin trading. The second strategy is buying the dip. It is common to hear the phrase buy the dip whenever the market hits a bear run. It is a cheaper way of investing in your favorite crypto asset. The prices of crypto assets are low in bear compared to the sky-high prices that come with the bull market. So, the bear phase is the best time to invest in your favorite crypto asset cheaply. Let's say you've also wanted to increase your investment in Bitcoin, Ethereum, or any other crypto asset of your choice. In November 2021, Bitcoin hit its all-time of $69,000. It was expensive to invest, but now you can do so when the price is $22,000. It will earn from future price appreciation. The third strategy is staking on high-reward platforms. Staking is a great way of earning passive rewards on your favorite crypto assets. You can think of crypto staking as making dividends on your favorite equity stocks. You will be rewarded with more assets if you lock your crypto assets in specific platforms. Staking has its advantages, like you will free crypto assets and rewards. You can lend the excess rewards to DeFi platforms and increase your earnings. Funds are locked, relieving you of panic selling. The rewards help cover your losses associated with the bear run. You can also check out other staking platforms like Binance and choose what's best for you. The fourth strategy is crypto saving and lending. Crypto saving and lending is another cool way of making passive income from your assets in a bear market. It gives you leverage similarly to staking, but is riskier and attracts higher interests and rewards. First, depositing crypto assets in a platform will earn you free tokens on most platforms. As mentioned earlier, these free tokens can help hedge against price volatility and losses. Second, you'll earn interest for every crypto asset you lock for an agreed period. Centralized and decentralized platforms offer saving services. For example, Binance, a centralized platform, provides the service with varying interest rates depending on your saving crypto asset. But you may face losses if the borrower defaults on their loan. So, you should be cautious and deal with only trusted platforms that demand enough collateral from the borrowers. The fifth strategy is scalping. Scalping is a popular trading strategy in the Forex market. It allows traders to minimize risks by only holding positions for a short while. So, they will sell just to capture the slight price movement for a margin. They turn the small margins into a massive profit by executing multiple daily trades. Crypto assets are very volatile, but that's the catch. That's what makes them lucrative. The scalping strategy is best applied at the start of an upward trend in the market. For example, let's assume crypto market stats from CoinGecko. Bitcoin, Ethereum, and Tether are all in the green for the past 7 days. Let's assume that this may signal an upward trend and the end of the bear phase. You can use scalping to exploit the small price movements. But you'll need to perform multiple trades to scale your earnings. You can achieve this using trading bots. The crypto trading bots will help you buy and sell at every price level as much as you need to. That saves you the hassle of making the trades manually. The sixth strategy is yield farming. Yield farming is a way of earning passive income by providing liquidity to DeFi platforms. Because you're providing liquidity to the platform and helping it run, you're entitled to a portion of the fees and interests the platform collects. That's the principle behind yield farming. In some cases, the DeFi platforms drop their native tokens, allowing you to collect them cheaply. For example, Uniswap dropped its native token, UNI, in the past, allowing liquidity providers, those providing liquidity to its platform, to collect it cheaply. That's the principle of yield mining. So, you can leverage yield farming and mining to drive your passive income in the bear market. Crafty investors make money regardless of the state of the market. To be one of the crafty investors, you must master how to crash it in a crypto bear phase. We've highlighted the strategies to make you a great bear. These strategies ensure you make money from staking to shorting as the market crumbles. Be a great bear, but be cautious and only spend what you're willing to lose.